Welcome, everyone. My name is Ryan Fries, and it is time for a midday snack coming to you live from the Friday AI studios here in Atlanta, Georgia. And I want to thank you very much for being here today and joining me. I hope you're having a fantastic Thursday so far and that you've been very productive, but you're able to set that stuff down for just a moment and have this chat with me here at 1 p.m. Eastern Time. And so I want to, before we get too far along, talk a little bit about what this is and why we're doing this so that we have a better understanding of what Midday Snack is all about. So, what we're going to do is beginning today, December the 1st, we're going to have daily through the weekday episodes and shows of Midday Snack, which is a 30 to 45-minute show, depending on what's happening that day, at 1 p.m. Eastern every weekday for you to join us here. So, the purpose behind that is to have some consistency and regularity for us to get together as an insurance community, insurtech, fintech community to learn stuff that we may not have had exposure to before, meet people that we've maybe never spoken to before either, broaden our horizons, and try to do our best work together. Okay, so differently than perhaps a lot of the other insurance associations out there, the National Insurers Alliance is trying to bring something to you on a regular basis so that we can all rally around and experience this every day. And so I hope we become part of your daily routine as you set your work down for a brief moment in the middle of the day. Now, if you're unable to join us each and every day at 1 p.m., you shouldn't fret because this is going to be made available after it's been broadcast as well as a recording so you can watch it anytime you feel like, anytime that you are able to. Specifically, you guys there on the West Coast, of course, 1 p.m. Eastern is pretty early for you guys to be taking a break. So look for us. What's happening is we're being streamed on YouTube, Facebook, Twitter, and LinkedIn. All of those spaces are going to have archived versions of this and each and every show that we broadcast from this point forward, so you can watch it at any given time. You'll also notice that in these spaces, you'll have the ability to chat with one another and myself and any guests that we have on the show. And so we welcome you to do that. We see most of that activity, and we'll try to showcase that on the episodes as we can weave them into the show, answer any questions you may have, and we'll try to bring that onto the broadcast. And if not, maybe we'll reach out to you offline if we're unable to do so while we're speaking. Okay, so let's talk a little bit more specifically as to what we are trying to accomplish here. So, our idea here at the National Insurers Alliance is that we're trying to put together a break room type environment for us to sit around and chat and discuss. So, it's a lot less formal than a lot of the other feeds or videos that you see out there. We're not interested in just showcasing people that are trying to do a one-off, show off their wares and get you to call and click and try to buy stuff. Now, while you will be exposed to a lot of new ideas and new people and new products and the like, you will be interested in reaching out to them. What we're trying to do is introduce you to the people behind the products and the companies that they work at, get a feel for what they represent, what their path was to get to where they're at, and learn more about them individually. And of course, whatever's going on with them, whatever the new product or opportunity or feature program that they might happen to have, and why that would be useful to the community. In addition to having regular guests on here, and you'll see, by the way, at the bottom of this broadcast, you'll see that there is 2 links. One is if you're interested in becoming a guest on this show, click on that link. It shows the production schedule in the calendar so you can sign up on the times that work for you, so we can get together and have a chat and have you on this show on a regular basis or on a one-off. And then the second link is for the audience, and I want to speak a little bit more directly about that now. So another unique difference here is we're trying to elevate others, elevate each other, work together as a community, because we all have a shared vision in one fashion or another in this space. Being in the insurance community is that, we want to do our best work, sell more, service more, and be better at doing both of those things so we can make more money for ourselves, those that rely on us in our jobs as cohorts, or perhaps people that work for us if we are the owners and the operators of our organizations, and of course our families. So we all share the same ambitions. So The idea is to work communally. And so, you as the audience, I'm looking for your interactivity as well. So, the second link down below is for you to share your wins of the week. Perhaps you've just, gotten a new position, took a new job, blasted that sales quota that you were trying to get past, or there was a big challenge that you slayed earlier in the week. We want to hear about that stuff. I want to showcase it on here. So that second link down there is a way for you to submit a short video clip of yourself explaining what it is that you have done and why it was such a huge win for you. And I'd love to showcase that on here so we can build one another up and try to propel ourselves forward to doing our best work. That's not the only reason why that link's there, though. However, if you're looking for a job or open to a new position, submit a little bit of a background on yourself. Share your name, what it is that you do, why you'd be a great fit for someone that's trying to do the line of work that you conduct. And I'd be happy to put you on here as well to get more and more people seeing you. There are thousands of eyes on this program as we're pushing this out through all these different channels. There are, let's say 8,500 or so, or just under 10,000 on Twitter, 4,500 on Facebook, and growing on LinkedIn, as we've just now tried to recently revamp things on LinkedIn. So you will be seen, and we're looking to get you on here as well to help the community overall. So that's kind of the nuts and bolts of what it is that we're trying to do. This being the very first episode is going to be the most formal as far as how it's put together and creating the definitions of what the show is all about. But I wanted to set the expectations so that you know what you were getting into watching the show. So in addition to that, there will be some timely things we're going to discuss, some things that may have just happened in the news, some of the posts that shared earlier in the week, a little bit of a discussion surrounding some of these things, and we might talk about some new features or products that we've been testing here as well. Our own group regularly tests and reaches out to vendors of all sorts that are supporting the insurance community, and we report on that somewhat regularly. So it could be that we discuss that a little bit on here and make mention of where you can find more information about that, whether it be through our blog or through additional video material that's outside of the purview of Midday Snack. So be on the lookout for that as well. Okay, so speaking of which, I want to talk about one thing that we posted just yesterday, and that is that the California Department of Insurance has been sandbagging requests from insurance carriers for rate relief for at least 2 years, perhaps north of that, according to John Norwood's writing in the Insurance Journal. And interestingly enough, there's a lot of reports. Obviously, people are noticing already that the inflationary activity that's been taking place. The anticipation is that 2023 is going to have increased financial burdens across the board. Secondarily to that, which is obviously very important and influential, but during the COVID timeframe, the height of the COVID activities that we were all enduring, it was hard not to notice that many things became much more expensive because of a variety of reasons. But there was an influx of spendable cash and lack of mobility and lack of travel. But strangely enough, it increased the amount of activity when it came to used vehicles and new vehicles, but new vehicles weren't going to be made available because of microchips and various other manufacturing issues and transport issues to getting some of the imports over here. So used cars in particular skyrocketed in expense. And so you have this confluence of inordinately expensive used vehicles, an inflationary value, let's say, artificially inflationary value of used vehicle pricing. And so the gap between what the person purchased that vehicle for and probably the standard or average coverage that was being handled in California or here in the United States anywhere was disparate, meaning that there was just not enough coverage. So losses were going to be capped out at that, at the limits that were set in the insurance policy. But there was, the gap insurers having to make up the difference between what the primary insurer and the finance company was going to require for a total loss makes that huge. And so not being able to get rate relief is incredibly dangerous and difficult, specifically to the independent insurer, as you might expect. Some of the larger national brands can offset some of those losses. Of course, they don't like to do so, but by earning an adequate rate or perhaps even a favorable rate in a neighboring state someplace else, they can make up the difference. But if you're a regional carrier that predominantly or only exists in California or perhaps even a portion of the California market, it's so large, you could have been devastated, and many companies are seeing that occur, and the loss runs are going to be or continue to bleed to where they may not be able to survive, and so that's just it's really unfortunate. As things settle moving forward, however, um, car prices maybe it'll settle back into the sand somewhere where you don't have a 2002 Toyota Corolla for $15,000. That can become a little bit more stabilized. But as of right now, that's a major problem. So if you have any thoughts about that, I'd love to hear from you here in the chat rooms. You can buzz around and talk a little bit about that and let me know what you think about that. Or use the link below that we're going to include at the bottom of all of our broadcasts so you can interact with the show. If you want to fire off a video, short clip comment about that, I'd love to hear about it. Second thing I want to talk about, and this is a lot more uplifting and exciting, at least for myself and others that I've spoken to, is that artificial intelligence continues to be incredibly exciting and interesting for a lot of folks. And trying to stave off a lot of these loss results, particularly what I was talking about there, which you can't really do much about without the Department of Insurance's participation. But focusing on forecasting and trying to plan when certain events are going to take place, or being able to create a predictive model for when there's going to be loss results, where they're going to happen, what types of property or different things are going to be or have the highest probability of enduring a loss. There's a lot of great companies out there doing some amazing work, and it seems to be advancing quickly. So I'm excited to see what we can achieve or accomplish with the artificial intelligence approach to perusing the landscape, taking quantitative previous historical data, trying to work that into new models with current and perhaps future trends to arrive at an anticipated loss number that you can brace for and adequately underwrite actuarially sound rate, is an interesting prospect. Conversely, it it reminds me a little bit though of EVs or electric vehicles, in that if you have autopilot on, which is its own automated intelligence, and it doesn't do what's anticipated, it messes up, takes you off course. The GPS coordinates don't work correctly. The satellite's not communicating with the vehicle like it's supposed to. And it veers off, it smashes or drives off a bridge or something like that, or careens into oncoming traffic. Who's responsible for that? Now, I'm not answering that question here, but if you are a big time insurance, company, and you're looking at floodplain insurance or, perhaps wildfire protection and stuff like that, something that has pretty sizable implications if you get it entirely wrong. And you think too that some of this modeling would inform preventative activity, specifically when it comes to something like that that's not as individually driven, like property or an individual's driving vehicles. So if you anticipate that it's going to be a lush season, there's not going to be, the opportunity or the propensity for wildfires. It's going to knock out thousands of acres or so, a lot of surrounding property, billions of dollars in loss, and you short run that. So you buy into the market, let's say, and you try to get aggressive. So you take on a lot more policy count and you try to drive up your saturation, and you got it wrong because the artificial intelligence anticipated something wrong. It threw a screw someplace. Ultimately, while artificial intelligence in both cases is intriguing, we're still not at a point, and I don't think we ever want to actually get to a point where it's completely hands off, to where you don't actually have to feed it some of the variables, assist it with some of the algorithms and some of the ideas as to why you're going to arrive at some decision making. You're not going to hand that off to a computer to completely automate, to where there's no persons involved and determining what risk means, what decisions are made, and how rates are made, and all this type of stuff. So I'm very interested in and the tech behind that. It's really kind of cool, but simultaneously, I don't anticipate that there's going to be that it's that faulty, that there's going to be that many major mistakes. But at the same time, that's why we still need individuals, talented people to look over these things, have a fail safe, some sort of a proof, depending on which case, whether it's the EVs or protecting or ensuring a lot of property or space. What's the safety net? What's the anticipated human element that's going to protect us from a faulty algorithm that's trying to do too much heavy lifting? So anyway, those two things I'm very interested in. One could feed the other, perhaps. It could be at some point one day down the line that the Department of Insurance, in some way, form, or fashion, leverages, artificial intelligence and predictive modeling of what, it would have been very difficult under the circumstances of the coronavirus influencing the steep increase of used car pricing in that particular instance. But nonetheless, anticipating over the next 5 years that there's going to be X number of less drivers because millennials don't drive as much, don't have car ownership as much. The fractional use of vehicles leaves less car purchases and therefore less individual cars on the road, more ride sharing, let's say. These factors could be anticipated through some sort of AI modeling, and that the Department of Insurance would allow for a threshold of file and use rate changes that would assist some of these individual carriers that are getting hammered in the market right now. That would be interesting. So anyway, I appreciate it very much for you guys being here. I enjoyed all of this so far. Stay tuned for future episodes of Midday Snack, 1 p.m. Eastern, Monday through Friday. Should that change, I'll let you know in the episode that precedes the change. Like, the upcoming holiday schedule will likely not include every single day, as you can probably expect why. But otherwise, you can set your clock to it so that we can have a regular space for us to get together. And I'm certainly excited to do that. Please take the time to look down below and click on those respective links if you want to be on the show as a guest, or secondarily contribute to the show with a video snippet yourself. And I'll be sure to try to work you in so we can showcase it onto the show so we can work together. Thank you very much for being here. Have a good rest of your day. I'm excited for what you got going on. Let's do our best work, and I'll see you tomorrow.